Okay, everybody, here we go. It is me, Gregory Mannarino. It is Friday, September 16, 2022. I want to start off with a warning that we got here from Goldman Sachs, and they are stating this market could drop significantly from where we are now. The stock market could drop significantly from where we are now. Okay, we got another warning here from the CEO of Federal Express, who is warning that a worldwide recession is already underway. Well, I think we're worse off than that, and I believe most of you here would have to agree with me. We also found out on the economic news front that housing affordability just hit a 40-year low. All right, well, look, you think we're at the bottom here with that too? No, absolutely not. You know what's going on here, and it's 100% deliberate. I mean, how else can we put this? So what's going on now with the stock market is, well, let's go look over at that 10-year yield. 3.46, okay, slightly higher. Dollar strength, relative strength of the dollar, higher. Market is hating this. Stock futures are lower across the board. As a matter of fact, the Dow Jones Industrial Average futures are pointing towards an over 300-point drop right at the open. Trading doesn't start for about 32 minutes. Just freaking lovely, isn't it? Okay. So where else do we stand here? You got gold and silver under pressure, cryptocurrencies under pressure. You got crude oil catching a slight bid here. We'll see where that goes. So right off the bat, I want to hear from you. Do you believe, okay, we've covered this before, that we are already in a recession, or are we worse off than that? Look, all the economic news that you want to look at, it's bad, and it doesn't stop, and it's going to get worse. To me, we're clearly in a depression here. The average guy, the average girl cannot make ends meet anymore, earning an average salary. The pressure on the middle class especially is continuing to grow. No shock to you. No surprise at all. I've been covering this at length for I don't know how long now. And, look, the sad part of this here is not only is this by design, okay? There's no help coming down the pike here. Everything right now is set up in a way to make sure that members of the middle class continually have to deal with more headaches from a financial standpoint, not being able to make ends meet. Again, what's the grand plan? To make these people dependent on the system, to get them hooked on it. And look, what's going to end up happening here is very, very simple. You got a government who's, of course, going to say, oh, we're going to help you. We're going to start funneling you cash, because that's coming here down the pike. There's absolutely no doubt about it. Some type of universal income, some kind of price controls, another way, or more ways, should I say, to exert power and control on as many people as they possibly can. So what we're seeing now is, like I've explained to you, is nothing. Absolutely nothing. You must understand what's going on and where we are going. Period. The freaking end here. Now, there's a lot of talk again this morning about what the Fed's going to do. I'm going to just throw this out here real quick. I was going to talk about this in my Markets a Look Ahead, which I will do Sunday. Okay. Again, what bothers me is they're not talking about what the Fed has already done. That is, create this environment of surging inflation. Again, let's just listen to what came out of the mouth of Powell, himself. Okay, that inflation is largely because of monetary policy. Okay, well, they're responsible for monetary policy. They're responsible for the economy as well. So we have this environment of surging inflation. It's out of control, and everything's going to get much worse. The economy is going to continue to free fall as inflation continues to rise here. Okay, but there's no accountability. So what's the Fed going to do? Yes, they're going to raise rates next week. We got the FOMC meeting next week, Wednesday. We're going to hear from the Fed, public enemy number one. You know that. And, I don't think we're going to get a 1% increase in the federal funds rate. I really don't. I think a 75 basis point hike is already baked in. And, we'll see how that plays out. Looking at what's happening and continues to happen here with the debt market. The debt market is what? What is it? It's a ticking time bomb. I've been saying this for years. It's ticking louder. It's ticking faster. Global bond yields are rising right now because the debt market is selling off. This is a major, major problem. It's the key to everything is the debt market here. And as I said yesterday, and I said this is in an interview I did yesterday as well, this is a slow sell-off here. It's a controlled sell-off. Forget about when we get that uncontrolled sell-off. And that could happen at any moment. I mean, it could happen today where you can see that 10-year yield, jumping 10, 20, 30 basis points in one day. Think about what that means, what that would do to the stock market, especially because what we're going to get here, look, it's very simple. An uncontrolled sell-off in the debt market is going to cause a run to safety or a flight to safety. That's going to cause that knee-jerk higher in the dollar. So the market's going to have to deal with not only bond yields rising rapidly, but a stronger dollar. And this is massively stock market negative. So maybe this is what Goldman Sachs is talking about with their warning of a steep market drop. They're talking about a nearly 30% drop from where we are now, not from the top. But I'm here to tell you a secret, which you already know, okay? Before anybody else started saying this, okay, because a lot of people jumped on the exact same bandwagon, all right? I have said that an 80% sell-off in the S&P 500 from the top, it's absolutely going to happen. It could be greater than that. Look, we don't know where the bottom is in this market. Nobody knows where the bottom is. Why is that? Okay, because what happened during the last stock market meltdown is the Fed jumped in here with quantitative easing 1 when the Dow Jones Industrial Average hit 6,000. The bottom, the real bottom for the Dow Jones Industrial Average could be 2,000. I mean, think about what I'm talking about. An epic, massive, well, it would be the biggest crash in history, and it's coming. I mean, if you follow this blog, you know what I'm talking about. I've said this, and I've never wavered. I have said at one point, we're going to get a debt market meltdown, and that's going to crush the stock market. You get all these other people having you focus on the stock market instead of its driver. The driver is the debt market, and the meltdown of all meltdowns is going to start in the debt market, which is going to crush the stock market, and cash is just going to move. It's just going to move like it always does, from risk on into risk off. Commodities are going to skyrocket. I think this is pretty obvious, I think, obviously, to me, and I hope to you too. So, here's where we stand, just to summarize real quick. Stock futures are getting battered right now, like I said, across the board. Looks like a pretty big sell-off right here at the open. Will that sell-off get bought? I'm going to tell you where the key is here, and you know it already. If, in fact, that 10-year yield continues to rise today, if, in fact, the dollar continues to get stronger today, absolutely not. There will not be any buying here. You will see this market fall under more pressure. We could sell off another 1,000 points. Who knows? Who freaking knows? Just keep your eye on debt market action. Keep your eyes on the MMRI. The MMRI this morning, I'm expecting to spike. Mannarino Market Risk Indicator, link in the description of this video, free to everybody. I hope you're utilizing these resources that I have available to you on my website, all for free. Okay, the chat room there too. Get involved in this stuff. Anyway, so that's where we stand here with another CEO. This time FedEx coming out of the woodwork, saying that we're in a lot of trouble here. The global economy is in a lot of trouble here. I mean, come on. Do we need to hear this from these people? No, we know already. We're so far ahead of the curve, you and me, that it's just not even funny. So what do you think about this? Housing affordability hitting a near 40-year low. Do you think that as well is by accident? No. They want people to be slaves to the system. You can't own anything. You're going to eat bugs and you're going to be happy about it. Okay, this is what they're doing here. Again, in no way, shape, or form is this going to get any better. It's going to get much worse. Meanwhile, you're going to have parties at the White House celebrating the Inflation Reduction Act. You're going to have retarded presidents, Federal Reserve chair people telling you how great the economy is, how we're expanding. Meanwhile, the economy is contracting at its fastest pace ever in history. And I'm not just talking about the United States. I'm talking about worldwide. But you see, you're not allowed to know that. You're supposed to be lied to and propagandized, but not here. Not on this channel. You're going to get the truth hard and straight, whether you like it or not. People, just don't deviate. Continue to bet against the debt. Become your own central bank. The debt hyper bubble. The debt market is a ticking time bomb. It's going to go off. And you want to get yourself in the right spots. And like I said yesterday, prepare yourself mentally, spiritually, physically. Start to form ties in your neighborhood. Get with like-minded people. Again, what is their agenda? To keep you divided. To not allow you to even speak your mind. Remember what, if you're a terrorist here, if you don't trust your government, you are a terrorist. That, according to Homeland Security Chief, whatever the hell his name is, Alejandro Retard. All right, look, I'm out of here. Love you a lot. Please share the video. Please comment. Let me know what you think. See you later.